There's a question most people never think to ask, even though the answer reveals one of the strangest tricks in modern finance. If nearly every country on Earth is drowning in debt, the United States, Japan, China, Germany, even the wealthy Nordic nations, then who exactly are they all in debt to? It sounds like a riddle. It feels like a conspiracy theory waiting to happen. But the truth is stranger and more revealing than either. Because the answer isn't a shadowy cabal or a secret empire. The answer is a system so normalized, so embedded in the architecture of modern life that we've stopped seeing it for what it really is. A machine that creates debt out of nothing, profits from it endlessly, and ensures that no one, not even the richest nations, can ever truly escape. Let's start with the obvious. When you hear that the United States owes over $33 trillion, your first instinct might be to picture some foreign power holding the bill. And yes, foreign governments do hold a chunk of that debt. China owns around $1 trillion in U.S. Treasury bonds. Japan owns even more. But here's the twist. China and Japan are also massively in debt themselves. Japan's national debt is over twice the size of its entire economy. China's local governments are buried under obligations they can barely service. So if everyone owes everyone, how does the math even work? The answer is that debt in the modern world is not a simple IOU between two parties. It's a product, a tradable, profitable, endlessly renewable product. And the people who profit most from it are not nations, they're institutions. When a government needs money, it doesn't go to a single lender and beg for a loan. It issues bonds, promises to pay back the borrowed amount plus interest over time. These bonds are sold on the open market to anyone willing to buy them. Pension funds, insurance companies, mutual funds, foreign central banks, hedge funds, and most importantly, commercial banks. These institutions purchase government debt not out of charity, but because it's one of the safest, most reliable investments in the world. Governments, after all, can raise taxes. They can print money. They rarely default. And so, the debt becomes an asset, something banks and funds hold on their balance sheets, collect interest from, and trade like stocks or real estate. The government gets cash today. The creditors get a steady stream of income tomorrow. It's a perpetual engine, and it runs on one fuel: your future. But here's where it gets darker. The largest creditor to many governments isn't some foreign power or Wall Street titan. It's their own central bank. In the United States, the Federal Reserve holds trillions of dollars in government bonds. In Japan, the Bank of Japan owns nearly half of all Japanese government debt. In Europe, the European Central Bank has vacuumed up bonds from member states to keep the system afloat. This is where the illusion cracks wide open. A central bank is not a private company in the traditional sense, but it's not exactly part of the government either. It operates with independence, controlled by unelected officials, often influenced by the very banks it's supposed to regulate. And when a central bank buys government debt, it doesn't use money it earned. It creates that money. out of nothing, with keystrokes.
Think about that. A government borrows money by issuing a bond. A central bank buys that bond by creating new money. The government now has cash to spend, and the central bank now holds an asset that pays interest. But the money didn't exist before the transaction. It was conjured into being the moment the debt was issued. This is not a loan in any traditional sense. It's closer to financial alchemy, turning promises into currency, and currency into control. The debt is real. The interest payments are real. But the money backing it all? That's just trust and accounting. And as long as everyone keeps playing along, the machine keeps running. So who profits? Not the taxpayers who ultimately foot the bill through taxes and inflation. Not the workers whose wages lose purchasing power as the money supply expands. The profits flow to the institutions that hold the debt, the banks, the funds, the bondholders. They collect interest every year, year after year, on money that in many cases was never truly theirs to begin with. And when a crisis hits, when the economy wobbles and defaults loom, governments don't let these institutions fail. They bail them out. They print more money. They expand the debt further. Because the system cannot afford for the creditors to lose. The entire architecture of modern finance depends on their survival. Now, zoom out. Globally, total debt, public and private combined, exceeds $300 trillion. That's more than 3 times the world's annual economic output. Governments owe. Corporations owe. Households owe. And yet, if you try to add up who all these debtors owe to, the numbers don't point to some external force. They loop back into the system itself. Pension funds hold government bonds. Banks hold corporate debt. Insurance companies hold mortgage-backed securities. And all of these institutions are themselves leveraged, meaning they've borrowed money to buy the debt they hold. It's debt stacked on debt, promises backed by promises, with central banks standing at the center, ready to create more money whenever the tower starts to wobble. And that is the hidden engine behind our entire economy. A system built on debt, sustained by illusion, and protected at all costs. While most people work harder just to stay afloat, the real power lies with those who control the flow of credit itself. Because as long as debt exists, control remains. If this opened your eyes to how the global debt machine really works, don't forget to like, subscribe, and turn on notifications. Stay curious and stay aware.